All right, good morning, everybody. All right, let's get started. All right, so we had a pretty flat session on the US, pretty volatile but flat at the end of the day on disappointing retail sales. We had big moves in the dollar, gold, and silver. As Joe's mentioned in the past morning calls, it definitely feels like we're at a bit of an inflection point in markets. Every little piece of data that comes out causes big moves in the US Treasuries, the dollar, gold, silver, moving around a lot. So I think we can expect a big move to come out of equity markets as well. So on those retail sales, they came in at zero, missing expectations for a rise of 0.2%. Dollar index fell to a 4-month low to 93.51, while the euro rallied to as high as 114. And then we had U.S. crude oil inventories, which fell by 2.19 million barrels last week, which is the second week in a row that inventories have declined, which is obviously keeping the oil price a little popped up. All right, in Asia we had a mixed session. Hang Seng up small. On the Hang Seng we had Tencent, which was up almost 3% on the back of Tencent's earnings after hours yesterday afternoon. Naspers already had a reasonable move after those numbers came out, so I'm not sure if there's that much in the Naspers price, but there might be a little bit of movement on the open. We had Shanghai down, Kospi up, Aussie down a little bit, miners all down, Billy's, Rio, Glencore all down around about 2%, and then Nikkei was the worst performer at 0.8% down. All right, charts of interest today, just showing the US yield curve at the steepest level of the year, which is at 171 basis point spread between the 10-year and the 2-year treasuries. All right, so corporate action today, we've got Sappi that's coming out with earnings later. We had Mondi that came out yesterday, which really surprised to the upside. We had a great move out of Mondi, up over 10% at one stage. So obviously Sappi, a similar industry, you might want to keep an eye out for that one. All right, key factors today, we've got Japanese machine tool orders year on year, which came out earlier. Then we've got SA gold production 1130, mining production year on year at 1130 as well as platinum production. Then out of the US at 230, we've got PPI final demand, and at 230 as well, initial jobless claims. All right, let's have a look at a few charts. All right, we had quite a bit of action yesterday. If we have a look at the Aussie to start off with, we on that recent sell-off we had last week, you can see how we tested that the support line almost to the T and reversed strongly off that level. Now it looks like that level, that momentum might be fading a little bit. So it'll be interesting to see if we do get a little bit of a correction back to test that level. If we don't and we move sideways for a little while, I have a feeling that we're going to be carrying on going higher. We've definitely got a much higher target from this pattern that's broken out here. We're looking in the vicinity of 4,000 to 5,000 points possible upside just from this pattern that's broken out. So I think by no means this is the top, but a minor correction is possible in the short term. All right, so Aspen's one we look at pretty regularly. This head and shoulder still playing out. I wasn't able to catch much of a bounce in the last few days. Got close to testing the neckline at around, but between sort of 365, 370, that area. Looks like it's turning down a little bit again. Keep an eye on it. If we can break back above 360, then possibly we can go back and test that neckline for sure. Otherwise, the target's still around about $300 on Aspen. So just be prepared for that. Don't get too long yet. Right, next one, BGA. BGA has been consolidating quite a wide range over the last few months, starting from January. We've got a bit of an inverse head and shoulders continuation pattern forming here. We need to break above 193 to carry on going. Possibly when the weakness in the domestic stocks ceases, then we might see a little bit of a reversal of these current levels. Have a look for, I think if you can get a decent reversal candle off this level, or possibly the 200-day moving average, which is slightly lower at 177, then that could be a good entry point for VGA if you like that one. If you look at CFR, I'm just going to get a slightly longer term view here. So CFR, we've been also massive consolidation for a few years now. We recently broke out of a bit of a symmetrical triangle here, and we broke a little, we had the quick move higher to about 109, and it's been coming back to test that level over the last few days. You can see this 105 level, really important level here. If we draw it, actually it's a bit of an inflection point all the way across here. So watch the 105 level, that could be important, otherwise the support line comes in a little bit lower than that. If we get a reversal of these levels, or possibly break this flag, if we can draw a flag here, then we could see a continuation of this move higher. Theoretically, with a breakout of the symmetrical triangle, we could have quite a bigger high target on CFR. Right, then looking at the platinums. All right, Impalas, I just want to go down to the shorter term target. If we look at, while we're on the daily, let's have a quick look at it. Very important level here at 70. This is where we broke down previously, and we're spending a lot of time just below that level over the last couple of weeks. If we go down to a 30-minute chart, we've got a bit of a head and shoulders forming here, quite symmetrical. So there's quite a line in the sand here. We're looking at a level of about 65.5. Keep an eye out for that level. There's actually been a lot of these commodity stocks that have formed very similar patterns. So it's a pattern that's formed in the commodity sector as a whole, not really at an individual stock level. If you look at Amplats as well, the pattern is definitely there in Amplats as well. I would say Amplats is actually probably broken and is now consolidating just below that neckline. So keep an eye on 320 on Amplats. If we break 320, there could be a quick move down to about 300. Right, another one, Kumba. Another one forming here in Kumba, as you can see, a little bit lower than where we're currently trading at around $56. If we get a move down from where we currently are, it's 165, and we can break that level, then there could be some more downside in Kumba. But obviously, you don't want to preempt these things. You want to make sure they break those levels before you get short again. The commodity sector has definitely been the better performing sector over the last couple of weeks. So as I say, you don't want to preempt it. And then also, while we're looking at iron ore, let's just back this out, go to a daily. Now this thing's been massively volatile. I wouldn't recommend anybody trade this thing in any kind of size because you can really get cleaned out. But we've got quite a definitive level here, and it comes in at exactly 100 Rand. We get a breakdown below this 100 Rand level, we could be looking at a very quick move down. Alternatively on the upside, we've got a trend line coming in here at around, let's just have a look what the exact level is. I think we're looking at around, around 130, 129 to 131, it's the rough level. A break higher than that would definitely be a sign to get out of. Also, a break below 100, I think we could get a quick move down. And then the last one I want to have a look at is we had some action in Capitec yesterday on that book build. We traded all the way down to, I think 108 was 508 was the low, and then rallied quickly off there. It was a good intraday trading opportunity. Traded as high as 525-ish, but sort of fell a little bit towards the end of the day. I think closed just below 520. But as you can see here, also forming a little bit of a head and shoulders after a big move up. So I'm a little bit cautious on it. I have to see what whether this book build causes a bit of profit taking. Obviously, still one of the most solid stocks on the board, so no need to panic too much. But right now, sitting right on that neckline at 520. I think if we can't retain that level over the next couple of sessions, then we could have a little more weakness in CPI. but if we do break higher, I think we could probably draw a little flag here. So I would say a move above sort of 540, 545 would be sort of a safe point to go long as a failure of this head and shoulders. And then last one I'm going to show is PSG, also related to Capitec, as they hold a big portion of the company. You can see how they closed around 194 in the open, just based on the back of Capitec, but quickly regained that and actually broke up to new highs, new closing high above 200. So this very bullish for PSG, and it looks like it's going to be going high in the short term. And that's all for today, guys. Good luck trading.